Welcome back to Investing Talk Podcast. Today, we're tackling a question a lot of you have been asking. Is Archer Aviation a good time to buy right now? We'll sift through the latest info, look at the company's prospects, and really try to help you understand what's going on with this high-flying electric vertical takeoff and landing company, EVTOLs. Before we jump in, though, if you find these talks helpful, please do subscribe, like us, maybe leave a comment. And hey, if there's a specific company you want us to look into next time, just drop its name in the comments below. So, Archer Aviation, ambitious player, urban air mobility space. It's a sector with, well, a lot of buzz. And our sources, thankfully, give us a pretty clear picture of where Archer stands. We've got reports on recent catalysts, things coming up, the fundamentals, technicals, even some speculative rumors out there.
That's right. And what's fascinating here, and really the challenge for you listening, is connecting that ambitious vision they paint with the cold, hard financial and market data. We'll explore where the optimistic analyst views sometimes bump up against some more cautious technical signals, help you get a comprehensive understanding.
Okay, let's unpack this then. For anyone maybe new to Archer Aviation, what's the basic idea and what's been happening with them recently that we should pay attention to?
Sure. So Archer Aviation is really a key player in this emerging eVTOL space. They want to revolutionize, basically, how we get around cities. Our sources are highlighting that over the past 3 months or so, they've seen pretty significant partnership expansion, raised substantial capital, and there's been strong momentum in the whole sector. For investors, the focus is definitely shifting now towards earnings, regulatory news, and what the big institutions are doing.
Right. Okay. That's a good overview. Now let's zero in on those last 3 months. June, July, August of 2025, because some really key things happened then. What were the main themes?
Well, if you group the events, you see a clear pattern. They significantly strengthened their finances and expanded partnerships. So back in June, Archer announced that strategic partnership with JetX. And that's not just, a handshake deal. It's about building out the actual infrastructure for eVTOLs, supporting their global launch plans. It signals real commercial reach. And critically, that same month, they closed an $850 million capital raise.
Okay, that's a big number.
Huge. It shored up their liquidity to about $1.724 billion. And that money is specifically for getting their Midnight aircraft certified and into manufacturing.
That $850 million, it's not just a number, is it? It really changes their risk profile, at least in the near term.
Yeah.
Buys them runway.
Exactly. It buys them roughly 12 to 18 months of operational runway, eases those immediate dilution fears,
Yeah.
But for you listening, the real insight is it's a bridge. It's not the final destination. They still face that looming question. How do they fund things beyond that? Especially if certification, hits delays.
All right, that makes sense. Okay, so that was June. Then July. Things got a bit more interesting. Mixed signals, maybe.
Yeah, July was interesting. On one hand, the CEO was publicly highlighting White House policies that favor eVTOL development, pointing to potential regulatory tailwinds, government support. And this was followed by several analyst upgrades. Big names, UBS Group, Canaccord, Needham, they all reiterated buy ratings.
So, still positive from them.
Very positive. And they raised their price targets, forecasting more sector growth, maybe big deals coming.
Okay, but hold on. You've got this analyst optimism, buy ratings, targets going up. But then the market itself, technical analysis in July, actually flagged a sell signal. And the stock dropped like 16.3% off a pivot point mid-month. That feels like a major disconnect for listeners. How do you square that circle? Is the market seeing something the analysts aren't, or vice versa?
That's a really vital observation. And it's a perfect example of that tension,
Yeah.
between the long-term fundamental story the analysts love and the short-term market dynamics. That sell signal, it often comes from chart patterns, price action, suggests near-term weakness, even if the long-term potential looks good on paper. So for you as an informed investor, it means you have to carefully weigh that enthusiasm for the future against the current cautious, maybe even bearish sentiment you see in the daily trading. It's tricky.
Yeah, okay, that clarifies it. So heading into August, how did that picture develop? Did things align more?
Well, in August, the focus shifted towards their Q2 earnings preview. Analyst attention picked up again. The consensus outlook was signaling improved bottom-line performance, meaning smaller losses, okay? Not profits yet, and progress on building out that Midnight aircraft line. But interestingly, trading volumes dropped off quite sharply, which raised questions, were investors sitting on the sidelines before the earnings, waiting for updates? Despite that, the price target consensus held firm, $13.43. That represented like a 60% upside from where the stock was trading, near $8.60. So that continued to support those strong buy analyst ratings overall.
Okay, so we've dissected the recent past.
Yeah.
Looking ahead now, what should we be watching for in the next few months? What could really impact Archer's path?
Right. So for you, the investor, the immediate question is, what are the near-term drivers? And our sources point to several key dates and events between, say, August and November 2025. August 11th, for instance, that was the Q2 earnings release. Expectations were high, partly because of that analyst optimism, and people were looking for proof of commercial progress, cost reductions. Then looking ahead, September 2nd, you've got the Russell and ARK ETF rebalancing. Index changes like these can definitely drive extra volatility, maybe more trading volume given Archer's profile. After that, September 5th, there's a Labor Day holiday air mobility report expected. Sector-wide stuff. Might give clues on adoption rates, maybe regulatory shifts. Then September 15th, keep an eye out for major institutional buying disclosures. That could show how the big money is really positioning itself. And then finally, the next big earnings date is November 7th for Q3.
Got it. So those are the scheduled things, the sort of calendar events. But our sources also mentioned rumors, speculative catalysts, the what-ifs that could really, shake things up.
Exactly. These are the wild cards. If you connect this to the bigger picture, these are the things that could seriously move the needle. First, there's this persistent speculation. Could Archer announce its first revenue flights? Or maybe customer pilots ahead of schedule? Possibly even before year-end. That would be huge.
A massive proof point.
Massive.
Second, there's anticipation around potential White House and defense sector deals. Government contracts, subsidies. These could mean multi-year revenue commitments. Very significant. Third, the rumor mill keeps churning about larger aerospace or tech firms maybe looking to acquire Archer or lock them into an exclusive partnership. M&A chatter.
Always hovering around these kinds of companies.
Always. And finally, there's market talk about Archer possibly expanding into Asia or Europe through joint ventures with local partners. Any one of these could be a major catalyst. Adds excitement, sure, but also a lot of uncertainty for you to factor in.
Okay, so lots of potential excitement, future possibilities. But every story needs its gritty details, right?
Yeah.
Let's pull back the curtain on the actual numbers. Fundamentals, revenue, earnings. How does Archer really stack up? And against its rivals?
Right. And when we dive into these numbers, context is absolutely key. You have to remember, Archer isn't your typical company. It's development stage. So its financial health looks very different from a mature, profitable business. Revenue, for example, the pre-revenue. Reported no material revenue for the trailing 12 months. That's the last 4 quarters as of Q2 2025. 0.
Which is expected at this stage, right?
Entirely expected. Consistent with the business model. They're still building and certifying. Now, earnings. The net loss for those trailing 12 months was $612.8 million. Diluted earnings per share, or EPS, was negative $1.24, so still unprofitable. Reflects heavy spending on R&D, certification, getting manufacturing started.
And profit margins must be.
Negative, predictably negative, yeah. Lack of revenue, big expenses. And the analyst consensus is that these losses will likely continue through at least 2026.
Okay. What about financial health? Liquidity.
Debt. Liquidity is actually a bright spot right now. End of Q2 2025, they had $1.724 billion in cash and liquidity. That's thanks to that big $850 million raise we mentioned.
Right.
And that's considered enough to fund operations for the next, say, 12 to 18 months. Details are a bit limited, but most of their capital has come from selling equity, not borrowing. So total liabilities are well below their cash position, reduces near-term bankruptcy risk.
But cash flow.
Strongly negative. Free cash flow is way in the red, which, again, is typical for a company like this, spending heavily to develop. But it means they will need more money down the line if certification or commercialization gets delayed. They'll need to tap the capital markets again.
Makes sense. And the competitive landscape, who are they up against?
Oh, it's a highly competitive space. This emerging urban air mobility, eVTOL sector, main direct competitors. You've got Joby Aviation, Lilium, Eve Mobility, Vertical Aerospace. Quite a few. Now, Archer has a significant commercial order pipeline, some notable investors backing them. But at this stage, there's no clear sign they have a decisive technological lead.
So it's still a race.
Very much a race. Crowded field, everyone rushing to be first to market and scale up.
Okay, shifting gears then, let's talk technicals. What's the stock chart telling us? The recent price action, the trends for Archer, are these signals matching the fundamental story, or are they diverging again?
Yeah, this is where it gets interesting for you trying to time things, potentially. How is the market viewing the stock right now versus that long-term story? And the technicals, frankly, paint a more cautious short-term picture. In that August, early September 2025 period, Archer was trading roughly between $8.37 and $8.70 intraday. The range for the year so far was much wider, $2.82, all the way up to $13.92.
A lot of volatility there.
Huge volatility. Now, initial support where buyers might step in seems to be around $7.45. Resistance where sellers might emerge looks like it's near $10.26, which is the 50-day simple moving average, or SMA.
A key short-term trend indicator.
Exactly. And also around $9.13, the 200-day SMA, which is often seen as the longer-term trend line.
Okay, so what do those levels suggest?
Well, forecasts based on these technicals suggest a short-term trading range, probably between $7.45 and $8.60. And the momentum currently looks bearish, looking at those moving averages. The price right now is below both the 50-day and the 200-day SMAs. That's a pretty clear signal of a downward trend, technical weakness. The RSI, the 14-day Relative Strength Index, is at 46.85. That's kind of neutral, maybe slightly bearish territory, not extremely oversold or overbought, but leaning softer. And as you noted, volatility is high, 7% daily volatility, and only 9 green up days in the last 30 trading sessions.
Ouch.
Yeah. So the overall technical trend, bearish to neutral in the short term. That's despite the longer-term analyst optimism we talked about earlier. Another disconnect.
So many contrasting signals here. How do we make sense of that? The bullish analyst versus this more cautious, maybe even fearful market pulse. What's that mean for you, the investor?
It really highlights the contrast, doesn't it? You've got 7 analysts covering Archer. The average consensus is strong buy. And that average 12-month price target is $13.43. That's, what, 56% upside from current levels?
Significant potential upside, if they're right.
If they're right. But the target range itself is really broad, from $10 on the low end to $18 on the high end. That tells you even the analysts see a lot of uncertainty. Key recent news, like that $850 million raise and the government focus on eVTOLs, has kept that bullish analyst outlook intact. No major downgrades recently.
Okay, but what about the wider market feeling?
That's where it differs. Institutional sentiment, how the big funds feel, seems positive, but general trading sentiment is more cautious. We saw a fear index score of 39 out of 100. Anything below 50 usually suggests more fear or hesitation in the market overall.
Right.
Social media sentiment, moderately positive, but it's been declining lately because of the price volatility and, let's face it, the high level of speculation around the stock.
And insiders, buying or selling.
Interestingly, no significant insider buying or selling reported over the past quarter, which can sometimes be a signal itself, and maybe insiders are waiting too.
Could be. Okay, so given all this potential, but also these contrasting signals and the inherent uncertainty, what are the main risks? The things you as an investor absolutely need to be aware of with Archer. What could really derail things?
Yeah, this is crucial. What could derail that optimistic outlook? The risks are substantial, and they're pretty typical for a company at this stage. First, there's significant stock-specific execution risk. Big one. Delays in getting FAA certification. Problems scaling up production. These could cause severe cash flow issues and lead to more stock sales, diluting existing shareholders. They even noted in their 2024 10-K filing they expect significant losses and will need substantial extra funding beyond what they have now.
Which leads to the next risk.
Exactly, capital need. Their ongoing negative cash flow means they will almost certainly need to raise more money in the future, either by selling more stock, which dilutes everyone, or taking on debt. And critically, number 3, no revenue. 0 recurring revenue until 2026 at the earliest. That puts the company at huge risk if anything goes wrong with execution.
Those are big company-specific risks. What about broader market or sector stuff?
Definitely risks there too. Regulatory risk is huge. eVTOLs face evolving, very strict rules from aviation authorities globally. Any setback there could be major. The sector itself is, well, prone to hype. It's highly speculative, very exposed to shifts in sentiment. If the buzz fades, these stocks can fall hard.
Yeah.
And finally, competition. We mentioned it before. It's intense. Rapid tech changes, other well-funded competitors. They could easily erode Archer's position if Archer doesn't keep up the pace.
Okay. A lot to weigh there. So bringing all these threads together now, the catalysts, the potential, the financials, the sentiment, and these significant risks. What's the bottom line? For someone listening right now weighing an investment in Archer Aviation, is it a good time to buy?
Well, if we try to connect all that to the bigger picture, Archer Aviation really fits the profile of a high potential but also high risk speculative stock. We'd give it an overall rating based on our sources of maybe 5.5 out of 10.
So right in the middle.
Pretty much. The combination of that strong cash position, the supportive analyst ratings, the ambitious roadmap, that's definitely compelling. You can see the appeal. However, Those positives are significantly offset by the lack of revenue, the substantial ongoing losses, the reliance on future funding, the intense competition, and that considerable execution risk we just talked about.
So for someone actually thinking about putting money in, what does that 5.5 out of 10 rating really mean in practical terms?
It means the near-term technicals suggest a bearish to neutral trend, right? Downward pressure, while the analysts remain bullish long-term. So this stock seems suitable primarily for long-term speculative investment. It's not really for short-term trading unless perhaps you're specifically looking for a high volatility, event-driven play and you have a very clear exit strategy mapped out.
Definitely not a set it and forget it stock.
Absolutely not. This is a bet on the future, a future that still has significant hurdles to clear before it becomes reality.
Well, thank you for joining us today. We've really tried to explore Archer Aviation from all the different angles, the exciting future, but also the current financial realities and market dynamics.
Yeah, and as we've discussed, knowledge is most valuable when you understand it and can apply it. For you listening, the key takeaway is always weigh those potential rewards against the very real significant risks, especially in these emerging speculative sectors like EVTOLs. Understand why the risks are there.
And here's maybe a final thought for you to consider as you digest all this.
Yeah.
As this whole urban air mobility sector matures, what will ultimately determine the long-term winners? Will it be first mover advantage? Or will it be sustained innovation, maybe regulatory skill that wins the day? And how might just one unexpected regulatory breakthrough or maybe a major setback completely reshape this entire industry beyond anything we've even discussed today? Keep asking those kinds of questions. And remember to subscribe, like the show, and share your thoughts in the comments. We do read them. We look forward to our next analysis with you.